Hey, good afternoon, everybody. It's Mike. It is Monday, the 8th of December. It's happy to have our webinar. We have our special guest, Doug, one of our members. And Doug, if you don't know, has been running around in Silicon Valley for years, whether it was with Apple or Amazon, and now with a new company. And he's going to talk to us about the Ethereum complex today and how he sees this all playing out and where he sees this going. So I need to unmute you again. There you go.
Got it.
Good. So, please let's give Doug his time here. Let him do his thing. And Doug, I'll give it to you, and I'll shut up here.
Thanks, Mike. Hey, guys, I appreciate the opportunity. Hopefully, this lives up to the hype. The DP Ventures thing is something I used a long time ago when I was switching industries. It's just my consulting thing, kind of play on words a little bit. But appreciate the time again, Mike, in the forum. I've been with Mike since COVID era. Learned a lot, lost a lot, made a lot, lost it again, made it back. So with that being said, let's go to the next slide. I'll take you guys through kind of what I'm thinking. I think what's really important is, again, this is not intended in any way, shape, or form to be my resume. It's just to inform how I look at the market, how I look at some of these trends, how and why I make some of the moves that I make, and certainly I'm probably on a 7 and 8 out of 10, a risk taker from time to time. But when I see something, I move with conviction, and this is why. So I've been very lucky to do a lot of different things in Silicon Valley. Started in 93, 95, I was in semis. You can kind of read the background. So the first 10 years was in semis, semiconductor industry. You guys, I put the ticker symbols because it's easier for you guys to get context. And then I spent a decade in solar and clean tech, and then back to the mega caps. I was very lucky to spend 7 years leading and launching products and programs at Apple. I was fortunate to work on everything except for phone, pad, and watch. And then where I am now is a spin out of Google X Moonshot, which is called Tara, which is wireless optical communications. That's all for another day. So how I kind of look at the market is I'm looking for mega trends. And if you haven't had a chance to watch Steve Jobs' commencement address at Stanford, it's certainly stood the test of time and it's pretty compelling. And there's a lot of truth to it in what he says. And one of the famous quotes is listed there on the screen. So having worked there, familiar with the company, the DNA, and that commencement speech, once all this DeFi stuff started to take off, I started really, this is probably 6, maybe 9 months in the making, just from a personal portfolio evaluation perspective. And it really started to come together in the last 60, 90 days. And I thought, well, you know what? Maybe this is something big for everybody. And chances are this is arguably probably the most significant reinvention of the financial markets in the last 20, 30 years. And it's going to be a bumpy ride, don't get me wrong. But I wanted to take a step back and say, I think there's really something here. So the result of that is, a chance to share it with you guys. All right, next slide. So the dawn of DeFi, what I'll go through is what's in. Certainly the drivers, what I've seen and come across in the last 3 to 6 months, the opportunity, the players and catalysts. You can see what's listed there is what's out. Not talking about politics. I have no idea about the timeline. And certainly risk reward, that's all your own personal choice. And this is a little bit of the disclosure. I'm not certified, not FINRA, none of that stuff. So this is just me just sharing content, no financial advice. Recommendations, that's all on your own. Why am I doing this? I just, was walking through. I think I see some things a little bit differently just because of the course of my career. Maybe I'm able to see opportunity and seize it, and then you can see where I'm trying to get to personally and professionally, and then just a chance to pay it forward. So, with that being said, let's get into the real stuff. So I think the easiest way to look at this is forget about the noise around crypto. Okay. What matters is RWAs. And it's being talked about more and more in whatever your financial forum is. It might be Bloomberg, CNBC, it might be chats, tweets, whatever the case may be. Real world assets and moving those assets on chain is an enormous reinvention of all the financial markets. It's just simply whether it's boats, real estate, equipment, different properties, those assets right now, really what the Ethereum network allows, and Ethereum in my mind is not crypto, it's a software enterprise level technology. So that's really what got me
Can you
focusing on
can you
this.
go
Yeah.
on that for a second? Because I think most people are thinking this is all Ethereum oriented. Give them a quick background on that.
Yeah, sure. So ignore I guess the terminology, whether it's Ethereum or Ripple or something like that. This is more like I look at this as sort of after the dot-com boom and bust and then recovery. This is the best analog is the software enterprise middleware layer. So if you go back in time, after the internet was built out and all the infrastructure was in place, and then things imploded, well, then the question is all that infrastructure is still there. So you have bandwidth, you have capacity, and then what steps in the middle of that gap to fill that gap was the middleware. So this is your enterprise software. This is your Oracle. This is your SAP. This is your your HR systems. This is all that middleware layer. So if you forget about whether it's Ethereum or Ripple or something else, the Ethereum network, the blockchain technology is the enterprise layer that now is able to connect all the financial systems around the world with smart contracts. That is enormous. So it's basically ripping out all your plumbing in your house and redoing it with high-speed fiber. That's the easiest way to think about that. Make sense?
Thank you.
All right. So you look at the assets themselves, and the real world assets is the underlying value as it's listed there. And there's some explanation up above. Then you have the stable coins, which is a proxy it's the bridge between traditional finance. You can see in liquidity down in the bottom, the first blue bullet I'm talking about. So the stable coins allow you to bridge between traditional finance and distributed finance and digital finance. Ethereum is the infrastructure layer that allows the back and forth and sharing of smart contracts and sharing of tokens that is programmable. And then there's records that can be reconciled, and settlement is 24/7 worldwide on a real-time basis. And that's probably where a lot of the momentum that you're seeing, whether it's BlackRock or Bank of New York Mellon or Citi and MasterCard and Visa, and we'll get to all the players in a minute, but it's really the efficiency skyrockets. You eliminate hand over hand transactions, you eliminate where the margin is, you improve efficiency, you reduce risk, and there's 100% digital transparency in a smart contract. That's a software play. So I think that's the takeaway. Where it all fits in the middle is any of these financial institutions that have loans, mortgages, cars, whatever the case may be, those are real world assets, but that's a shit ton of paperwork. And so if you think about, right, a refi, or if you think about selling a house, or you think about buying other property, the amount of due diligence that's necessary to figure out who owns that, or an LLC for small businesses, the ownership model of shareholders in an LLC, when you start to move transactions around, you can see on an order of magnitude why this gets really compelling really, really quick. So that's the main anchor of all of this, which really got me excited. Okay, any questions? All right. So then this slide is really intended to talk about where this can go. And so the left-hand, graphic is when if you assume that all the financial assets and tokenization of the real world assets will be real, and there's absolutely no reason to believe it won't if you look at the messaging. We'll get into separating signals versus noise in the next couple slides. But I just look at a nugget that's highlighted there, the World Economic Forum, 10% of global GDP is going to be on chain in 2 years. So you take a step back and you ask yourself, why would I not participate? It's your own personal decision. Obviously, everybody manages their own risk reward, whether it's 1%, 2%, 10%, 40%. I'm at 60. And I look at this and say the momentum is there. And that's without question, this is the direction of the markets and financial institutions. Then on the right-hand side is everything I was starting to explain about what is a real world asset and what could go on chain. And you can see it gets really kind of wild really quick when you look at discretionary spending around collectibles and art, entertainment and gaming. infrastructure, energy infrastructure. It's pretty compelling. So this is more, I think this is the money slide as far as where this can go and what the opportunity is. I wanted to make sure that you guys had a clear picture because this is now takes what I've been observing, and these two slides, I think, tell a very clear story about what the opportunity will look like over time. Okay. All right. So the big picture, this is real time. This is over the weekend. You have a new SEC chair coming in, and without a doubt, this is pulled from Fox over the weekend. Put aside whatever you may think about the market, the media outlet itself, but the interview was Maria Bartiromo, and so if you remember her from CNBC days, she's sharp and she's got a lot of credibility. So what he's saying and the form that he's saying it, that's certainly compelling. And you look on the right-hand side, again, forget about what the name is of the base layer, the transaction layer. Ethereum is receiving 80 plus 90% of the inflows of real world assets and tokenization going on chain. This is real time over the weekend. So you look at the message, you look at the strategic guidance of the SEC, and you look at what the enterprise level financial back of house plumbing, enterprise level software, right? Technology it's Ethereum. Without a doubt, this is where it's going. Right?
Doug,
Yep.
so what's happened with Bitcoin? Does that mean Bitcoin is not coming along for the ride with this? Is it being left behind? I mean, or is yeah, just trying to get an idea here. Or do you have a thought process on that?
Yeah, I do. It's a great question. If you go to the very last slide, I put that in there as backup.
Do you want to wait to that then, or want me to go there?
No, we can jump to it. Just
Hang
go ahead
on.
to the very last slide.
You guys get a lot of previews here. Okay, there you
Yeah.
go.
So how I think about it, this is a side-by-side comparison. You've got, Bitcoin and the whole messaging around digital gold, so on and so forth. I separate all that. I ask myself, right, there's notional value, which is Bitcoin, and then there's transactional value. And so what you're starting to see and why Bitcoin is challenged and will continue to be challenged, this is just my point of view, it's only as valuable as the holders and the number of holders that are holding Bitcoin. I personally have never owned it. I don't care. And the reason I don't care is I'm just going to put up toll booths on the financial network of the future, and it's picks and shovels. It's just like the gold rush. So Ethereum is the transactional value. Pennies and pennies and pennies add up around the world versus notional value. And so I would rather bet on transactions and institutional monetization of transactions over decades than, the notion that the entire Bitcoin digital crypto network wants to hold more and it has intrinsic value. I can't put a price on that, so therefore I don't care.
Got it. So basically, what you're saying is transactions are moving to Ethereum and not to Bitcoin at the moment.
Bitcoin doesn't enable a transaction. It's
Okay,
a it's a source of digital currency
got it.
that is an alternative, but the market and the industry is moving to transactions. And you could have Bitcoin as a store of value, but you need to convert it and buy and sell through an Ethereum network to actually do a transaction. It's a form of payment.
Got it. You guys make sense to you guys? Thank you. All right, and I think that's part of what what Doug is trying to get across here. And
Yeah, it's what you'll start to see. I mean, certainly there, in a market that is, de-risking over the last little while, they're highly correlated. But you can already start to see if you follow the Twitter X sphere that I do so closely, you're starting to see some decoupling between the two. And so I think that'll play out over time. All right, so proof of stake. So this is going to get into the technical weeds, and I'm not the technical guy to explain it. But going back to the real world assets Venn diagram, Ethereum on the network itself. So if you just again going to go back to maybe a simple, the copper plumbing in your house. If all the copper plumbing is named Ethereum, proof of stake would be like a BlackRock or like a Wells Fargo or GM Auto. right, would say, okay, we're going to stake and we're going to own, right, the master bedroom. And then, another institution with assets comes in and says, okay, we're going to take the dining room and so on and so forth. So proof of stake means you own and you've allocated, right, space, and you are the primary and exclusive owner of that particular part of the network, and your assets are staked to that. And that's the mechanism on how they actually transact, um, from across borders, across forex exchange, across institutions. That's how the Ethereum technology is intended to set up and work. It's about as far deep as I can go technically. Do your own research, but that's how I understand it, and it's the best way that you can. It's proof that you're on the network, proof that you have a secure node on the network, and proof that your assets are on the network and then available for financial transactions. Okay. I thought this was a cool slide, the table that I came across. It gives you a really good snapshot of who's doing what. This is from Bitwise. It's probably looks like September 30th. Maybe it's changed. Maybe it's, dramatically, maybe not. But what I really like to look at is going back to the Steve Jobs analogy on the right-hand side. Where are the dots? Like separate the signals from the noise. So when I look at the Bank of New York Mellon, and this is what really got me focused on this space. So for those that some of you may know, some of you may not, but the Bank of New York Mellon is the oldest bank in the history of the United States. It's a clearinghouse, right? It's a custody bank. So it's the intermediary actually between the Fed, the Treasury, and a lot of the bigger banks, and also handles a lot of the transactions behind the scenes on Forex. It's pretty compelling. So if these guys are involved, that tells you there's something there. So that's probably one of the single biggest data points that got me really focused on this. And I've owned the stock off and on for a while, um, but we'll get to the charts in a minute. But it's probably one of the most important, I think, linchpin or hub and spokes of everything that's going on chain. All right, cool. And then I took a step back, and being fortunate to work in some global companies, I asked myself, okay, this may be interesting in the United States, but so what? How does that actually really achieve, some of those growth targets of going on chain that the World Economic Forum published? Like, how's this thing going to go global is what I asked myself. So then I look at standards, and then, in the middle 10 years of my career on that first slide, so I spent time in solar, the first 10 years in semiconductor. And one of the industry forums that's still going today is called Semitech. And that was in the semiconductor industry in the 80s, 70s and 80s. It was actually founded by David Packard. And I'll come back to this slide, but I think it's important to understand how I, look at standards. The semiconductor industry formed Semitech as a direct response to a competitive threat from the Japanese that were dumping cheap semiconductors and electronics in the US market. Packard, IBM, Motorola, so forth, they formed an industry consortium. And it was actually the catalyst with some of those working committees that led to Moore's Law, doubling the performance and cutting the size in half every 18 months. So that actually ended up migrating over to solar in the solar industry. And I actually was a CEO and co-founder of an industry trade association to drive standards for the solar industry. Made myself all the way to, Department of Energy, was successful in receiving millions of dollars. And I just combined solar and Semitech and ended up with Solar Tech. That was my trade association. So that, enough about that. It's really looking for standards. So Swift you guys could look it up, but they've been working on a shared ledger. And this is why, again,
Well,
connecting the
SWIFT is
dots.
the international payment thing, right, Doug?
100%,
There you go.
exactly. So the Swift is
Banking,
the
how they all transfer money back and forth across countries and throughout the international community.
correct. And where it gets more interesting as far as the Ethereum complex goes, is they've been working on a shared ledger for probably about a year. Shared ledger in accounting terms, that if you standardize all the financial institutions around the entire world, your whether it's a penny for a car payment or a dollar for a loan for your equity in your house, whatever the case may be, like the ledger categorizes the financial transactions and flows. And if you're familiar with accounting, and balance sheets, right? Once you have a standard ledger, the data just moves. And so that ISO 20022, that was actually successfully completed on a pilot basis and now rolled out on November 22nd, something like that, just before Thanksgiving. That would in tandem with Bank of New York Mellon. Now what you're talking about is the oldest bank in the US as a clearinghouse, now working integrated across Swift in the entire financial markets. And I go, okay, now this gets bigger. Now you start to look on the left-hand side, migration at scale, past, present, and future. Now I'm talking about the Depository Trust and Clearing Corporation. So this is the foundation of the US financial markets. These are now standardizing and they're leveraging the work that was done by Swift and launching a blockchain platform. And they start to look at, okay, if you take the entire settlement layer in the US and you look at global Forex exchange and a standard ledger, and you ask yourself for medium and enterprise play, and that's Ethereum, then you go on the right-hand side and say, okay, well, what's going on with the US? And now you see the rollout of what the SEC is doing to give guidance. And there's a roundtable being hosted apparently next week. So this is really the catalyst. And this is, at the end of the day, how I've looked at some of these is I actually don't care what the right answer is because I'm investing in organizations and institutions that have a fiduciary responsibility to make this work for the world in trillions of dollars. Therefore, I just want to be in the game. The rest of it will get figured out because it has to. All right. You can probably sense my conviction. All right. So I thought this was kind of funny. This is the Larry Fink, and they put out a note in The Economist just last week. You're not going to be able to read it. That's not as important to read the entire article on this slide, but the link is right there. You can see it offline. But they talked about, Amazon, and they called that out in this is analogous to when the internet was in 96 when Amazon got started. Well, I was working at KLA Tencor at the time. We were making machines to make computer chips, so I kind of saw it firsthand. I thought it was really funny. And so the book there, Jeffrey Moore, I'd encourage anybody and everybody to have a copy of it handy. I've had it for 20 years. It's probably one of the most consistent books that talks about where we are with technology and innovation. You could take the Crossing the Chasm work, you could apply it to, toasters, you could apply it to Bluetooth, you could apply it to, speakers, wearables. The Crossing the Chasm analogy is an absolute just rinse and repeat over and over and over again. And that's where we are right now with Ethereum and blockchain technology. We're right there. And, just like Steve says, it just stands the test of time.
The book, Doug, is Crossing the Chasm.
Crossing the Chasm by Jeffrey Moore.
Thank you.
All right. Next slide.
Sorry, typing so they have the information.
Yep. No problem. Okay, so now we're getting into, what do you do? How do you play it? So I put together this slide. You can see, I thought it'd be good to look at, a simple, Venn diagram. I like visualization of, different buckets of information and seeing what's common. So this should be self-explanatory. The names are listed there. Courtesy of Gemini, actually created this by when I dropped some of my holdings in and said I gave it a few prompts, and this is what Gemini created. I'm like, yeah, that's pretty good. So you can see my holdings where I was. I didn't like some of the charts, so I peeled some things back. But what I have right now is full transparency. Again, I have nothing to hide. I'm going to do just fine, I believe, over time, but it gives you guys, plenty of ideas, and then you can make the call on your own. And I think from here we're going to go either Q&A, we could pause, or Mike, we're going to go through some charts. So I'm flexible, whatever the group would like to do.
I'll go through some of the charts, guys, and you can ask questions as we go. Sure. There you go. All right, Doug, take us away.
All right, DeFi chart time. All right, so I think this is where, Mike, what you and I talked about is, let's have okay, if you want to participate in the space, then let's talk about the charts and like what really makes sense if you wanted to get in. Um, so I like your feedback. Maybe what we do, Mike, is maybe, go through it purely from your perspective, like for anybody coming in.
Okay.
And then, I can kind of play devil's advocate, short term versus long term, big picture, which is how I'm looking at it.
So when you talk about BlackRock, you're talking about one of the best managed funds out there, right? They have how many billions under management there? They're always strong. They have ETFs. They have all their different offerings out there. This chart's not exactly trading well. When you look at the rest of the banks, which are near all-time high, we're not. But we are back above the 200-day. You have a very strong support area of 990. That said, 1180 area is a major resistance if you bounce to it. There definitely feels kind of range bound to me. And the other problem I have with BlackRock, which is not a pick on you, Doug, it's a very expensive play, right? It's a very you don't want to trade options on it. It's really best just to buy some stock and sit in it. But overall, I mean, you can't go wrong here. They're probably not going anywhere. And if they're heavily involved in this, then they're probably eventually going to come exploding out of this.
Yeah, I agree. And that's how I look at it. It's not a trader. It's pick your entry spot. And I look at this entire Ethereum complex, going back to some of the forecasts. This is a 3 to 5 year play. And I think going back, for those that end up getting a copy of the Crossing the Chasm book, like the first, and if I remember back at some of the major pivotal things I've seen in Silicon Valley, the first 2 to 3 years is the hockey stick. And then real good money, outstanding growth and opportunity is the first 2, 3 years. Then you get a really nice, stable, consistent growth 3 to 5, and then you plateau. So I'm looking at BlackRock as on a 3 to 5 year horizon.
Thank you. You guys have any questions? All right. Uh, Up next is your favorite, Doug, BMNR. I am not a fan of this name.
That's all right.
I mean,
That's all
um,
right.
Doug and I have very different opinions when it comes to this name and things. Well, it is Tommy Lee, and it's trying to hold the 200-day area, kind of. If it really pops, I think 65 is definitely in play, right? You can get a nice move up to that 65 area. I mean, if Ethereum goes, and let's not tend here. This has nothing to do, wrong, Tommy Lee. This has nothing to do with the whole complex. For this one to run, Ethereum has to move, Doug. And I think you would agree with that.
100%. It's
Okay.
100% correlated to
Yep.
Ethereum, and it's not for the faint of heart. And Tommy
Mhm.
Lee's Tommy Lee. Um, but I think there's another slide which I think I have it at the end, which we'll just save it to the
Yep.
end. So the business model, let's forget about Tommy Lee for a second.
Well, I mean,
Um,
I think he comes into this, right? Because he's well funded, right? So
well, he,
they're doing the MSTR thing. They're selling they're doing offerings to buy more and more Ethereum, and they're sitting on almost $4 billion in unrecognized losses at this point.
yeah, that's correct.
And they just issued a dividend, which I thought was the stupidest thing in the world they could do, other than they're trying to keep people involved in the stock and not lose investors.
Yeah, it's definitely a flashing point. It's a love-hate thing.
Yep.
There's a slide that I have at the end, which we could probably save, come back to later. So it's the business model is a DAT, digital asset treasury. So I have a slide in here that explains what this model is and why they think it has merit and value, along with there's a nugget in the Genius Act that was signed by Trump where uh, there's a 4% yield, right, that gets spun off based on your holdings and then transactional value of what you have on the network as Ethereum. So I'm in this for the moment, but if it goes to shit, right, then I'll liquidate. So
So
this is
let me
this is not for the faint of heart.
yeah, let me put more onto this here. Let me finish off here. This was a SPAC, and SPACs have a horrible tendency to retest the price where they convert from a SPAC into a stock, right? And that would put us down into that 10 area. And oof. And if this thing drops down under 15, Tommy Lee is good at raising money, people in. I'm not sure he can. I think his investors may run for the hills, and this could get liquidated. So I think Doug and I are both saying very, very high risk on this one. And please, think carefully. I'd
Yep.
rather see you buy the Ethereum ETF than buy this at the moment if you really want exposure. ETHE.
Yep, agreed. Talking to the group.
Yep.
So, for me personally, my weighting's very high. What I would do is I'd be out of it in a second. If I felt, but we have a little ways of runway. We're going to see how this plays out, but obviously to each their own.
Questions, guys? I'm going to move on. ONDS. Doug, give us your quick overview.
Yeah, so the it's more than a drone play. So ONDS is in the process of mergers and acquisitions for across the entire not only I'd call it more like homeland security and protection of real world assets. And that's why I actually have this in here. It wasn't by accident. So there's obviously the drone play, but there's what's more important going back to standards is they have a seat at the table working with Siemens on developing next generation secure Wi-Fi telecommunications and homeland security infrastructure. The reason that now you start to think, okay, in the context of real world assets, rails, rails, hubs, transportation, Europe, US Eastern Seaboard, it's an incredible set of infrastructure that will likely move at some point on chain. And they're now starting to secure and announce a number of different defense contracts, and that's just the beginning of it. So I look at Ondas as the Cisco of Homeland Security defense and um, you know, basically defense in the sky. Whatever the application is, whether it's correctional facilities or infrastructure or protecting assets, uh, Ondas, what they're doing mirrors what Cisco was doing in the dot-com days. Mergers and acquisitions. There's a portfolio. I have a different chat slide, which I didn't add in here, but they either private equity investments or acquisitions or joint ventures. It's like it's 12 different companies across the ecosystem by now.
All
So
right.
that's why I'm in.
For me, for the chart, it's had its well-defined wedge pattern. It's trying to break to the upside. This 9 area needs to clear it. Boy, is it struggling to break that 9. But if it goes, it could definitely find its way back to 12. Um, okay, I'll come back to that, Doug. One thing Ukraine war has shown, and now Russia's doing it, is just how effective drones are and how ineffective tanks and stuff like that are going to be in the future of this world. Um, so keep that in mind. Problem I have with ONDS is like many of these companies, they're hemorrhaging cash at a god awful rate, and they're going to have to do more offerings. They've already had a huge run, and names like this, if the market turns around and dumps, tend to get hit the hardest. So just keep that in mind. Anytime you watch a stock in a couple months go from the twos to 12, you know, not saying it can't go, but it could. And on that, David's asking, what would get you out of BMNR, Doug? I mean, I bailed the other day, a week and a half ago when they came out with the 3.5, which was higher than it is now. The stock was higher of unrecognized losses. I'm like, yep, I'm done. I just don't want to take the chance.
Yeah, no, it's a good question, David. So the way, what would get me out of BMR is if I see, going back to the signals versus noise slides, if I see that the signals flip. What I mean by that is Tommy Lee, he's wired pretty tight in Wall Street. So if the momentum stops, the momentum slows, the narrative changes, right? The big players step away from the edge. Then I would be like, okay, wait a second, the momentum is going away and fading, and he'd be the first one to get squeezed. I would
It,
look at this.
the,
I would look at the signals, not just BMR by
yeah,
itself.
I think the thing you need to watch there is if it unravels, it's going to be very fast.
Yep,
You
I
know,
agree.
it'll be probably start dumping in it overnight where he's getting forced to liquidate, and you could have a very tough time getting out. So just keep that in mind if that scenario happens. And I just need to point that out in this case because this is very different than most other companies.
Yeah, and I think for everybody here on the webinar, keep in mind, for my holdings and what my level of conviction. There isn't probably, 5, 15 minutes that doesn't go by where I'm looking at things. Robinhood after hours, 24/7. So I am paying attention, but not everybody has the time, or
Yep.
you may not have the commitment and conviction to do that. But I only do that because of the level of holdings that I currently do.
Let's talk MasterCard. I know MasterCard, if you're going to be doing transactions, they're going to be in the height of it, either them or Visa. I mean,
Yep.
pick your company, right? We chose MasterCard here because they're one of the better ones. I mean, so right now the payment space is kind of in a funk, right? Pick a name, none of them look particularly great. But you have a very well-defined downtrend if you could break it. The 515 area, if it drops, is a very strong area. I would look to buy it either if it held it or broke below it. Um, Very well funded, but unlike other payment names, it actually, this is the one, like Visa and American Express, they don't hold your debt, right? When you buy your credit card, it's a bank. MasterCard actually holds it. And if the consumer is in trouble, that could be a problem with the stock, which has nothing to do with what we're talking about today, but could it be a weight on the stock, right? Consumer default concerns. And, if the market dumps because of the consumer, then they're likely to take it a little bit harder.
Yeah, no, 100% agree between Visa and MasterCards. I'm building this out because I want the exposure.
Yep.
And what they're on record is between Visa and MasterCard in terms of fintech and DeFi transactions. There's a lot of tweets that are out there where you can see what they're already committing to in investing in technology, and they're going to be in position. So I just want to own it. This is really straightforward. Totally understand
And
what you're saying, Mike, near
and
term on the consumer, but this is
it's
where
a
I
safe
should be able to
company,
own
Doug.
it.
I mean, at the end of the
Yeah.
day, they're going to be fine. But I'm just saying,
Yeah.
if the consumer has problems, that's going to be a problem with more of a problem with this one than a Visa, would be my
Yep.
guess.
Yep. Makes sense. Again, this is about, why is it in my portfolio? And then, when would you enter? And that's individual choice based on the chart.
All right, Doug, this one's all yours because I cannot get behind these little guy.
This is FOMO Momo. That's all this is.
S bet.
It's really simple. We don't need to spend a ton of time on it.
Yeah.
This is retail where they're looking for a cheaper stock. It's,
Yeah,
9,
it's
10,
BMNR.
11.
It's a cheap VMNR, right?
It's a cheap BM&R, but it plays in. You can look at what they do. It's marketing and transactional space, and they also have casinos and gaming. So if you believe in the sports online betting movement, and eventually people are spending money, and then exposure to blockchain technology and assets, that's where these guys sit. So, it might be a little. You could call it a little piggy, or you could call it a piggy that's trying to grow up. It's a Momo FOMO retail play.
You
So
only buy this if Ethereum's pumping, and you
true.
don't sit in it. You get out. You
Yeah.
take it, you get out.
Yep.
Ignore your left side of the chart. That 120 plus movement, that was just absolute unbelievable stupidity. It should be ignored. What you need to know here is you're sitting on some strong support around this 10 area. And I would not be shocked if Ethereum starts to go, it runs back to 40, and that would be the trade to be trading in it during that time period. Outside of that, I don't believe this is something you want to sit in or own. I think if you really want one of BMNR is, God, a safer play than this. I can't believe I said that.
All right. I think I've been clear on why BK. Maybe Michael, just turn it over to you on this chart.
All right, hang on. Yeah, crypto apes, Reddit, crypto apes say it's going to the moon. Thanks, Isaac.
Yeah. Yeah. Well,
See,
okay, so we went from the Momo spec S bet to one of the best of them all.
so this is one of Doug's favorites here, and this is it's a regional bank, one of the, but it's a special one. There's nothing not to like about this chart. It's one of the stronger regional banks out there. It's just at the all-time highs here. It's well funded. It's a large one. It has a lot of support at 105. I have no lowlights on this chart. There's nothing I don't like about this chart. When the market was getting killed back in April, this one held in better, and it was one of the first ones to rally out of it and come back hard on the regional banks off the whole interest rate conundrum with things going on with the bonds. So take it away, Doug.
Yeah, just a minor nit, Mike. It's even though it's called out as a regional bank, but it's actually a global institution. It's a holding company.
It
Uh,
is, but it's
yeah.
it's it's in the regional bank portfolio.
Yeah, yeah. But as far as a business model, it's really interesting when you look them up on Wikipedia, and I've done all that work to see the history of the company and where it sits and how it evolves and where it plays. it's kind of like, it stems from the handshake closed door meetings on Wall Street. So I like this one for all the reasons that I've mentioned, including the chart. I added more actually today.
All right. Robin Hood.
Yeah, this is a classic. Uh, you've got the new age, and I take a step back and I ask myself, okay, for my kids and my stepkids and the generations coming up. Are they going to be on Schwab? Probably not. Are they going to be on Fidelity? Probably not. Right? But which the Momo, FOMO retail play in a platform, credit to Vlad for growing up and turning this company around. I'm sure you got a lot of advice along the way. But this is very simply where for the DeFi complex, I want to own platforms for the next generation that's going to access and take advantage of the technology and the blockchain, uh, tokenization movement that's going to happen over the next. This is a 5 to 10 year run for sure. So I started adding back SoFi after they issued that raise. I bought a little bit more today into the close, but Hood I just it's going to be the one in this space. There's only two names for the next generation. It's going to be Hood and SoFi.
All
And
right.
so personally, you want to own both.
All right, we're gonna move this a little bit. We're getting long in the tooth here. I like Hood. So I think Hood's great. I think it is now it reminds me of E-Trade back in the day when they were big. I've not been a fan of Vlad, but he's turned it around. He's actually become a good CEO, and I gave him credit for that. It's just one of the better names in the markets. They keep coming back for it. The 100 area is very strong support. I think dips to that or reclaiming that level should be bought. That said, it really needs to break 150 to get going, and you have to realize it's run from 25 to 155 in 8 months. Some consolidation is needed and welcome. You have a hidden shoulders pattern here, though it's breaking above on the right shoulder and invalidating it. All right.
Yeah, we were just talking about SoFi, so we can pause here. This is the last slide. It's I've already talked and introduced both at the same time, so I'll
I mean,
stop.
SoFi, guys, another one. It's a disruptor, right? The negative here is they decided to raise this came out. I did this and then it came out and they raised 1.5 or 1.8 billion in cash. They are a disruptor. They want to be a big bank. They're working towards that. They're heavily into student loans. And that's one of the silly things I keep an eye on because the student loan business defaults could evidently hurt them at the end of the day. But outside of that, 24 area strong support, 30 needs to break. Another one, very big on transactions. They like modern technology. I like it a lot.
That's
Take us
it.
home, Doug.
Yeah, the rest of it's all backup. There's no need to talk through it, but it's reference. I guess this one is a reference on the DAT business model, so people can read that afterwards. Next slide. So this is a comparison of DATs versus crypto ETFs. So you can pick and choose your pick and choose your poison or pick and choose how you want to play. And then next one, then yeah, this is kind of when you pick apart what's going on in the Genius Act, and you really get into some of the details of what's going on with Treasury and reserves and how what the current administration is working towards. It is enlightening. You put all politics aside. There's the big boys are playing. This is trillions of dollars in the works, so we'll see where it goes. And I think that's one more. Yeah, then we already talked about this, so. That's it. I think, Mike, we agreed on 45 minutes.
Yeah,
Being a guy that launched products at Apple, I'm right there 9 seconds early. Surprise,
nice.
surprise.
Any questions, guys? Doug, first of all, thank you very much for
Yeah.
doing this for us, everybody here. So I think, if you're listening to what Doug's saying is he's showing you what can come out and where we're going with this. And it's not just about Ethereum or crypto, right? These are real companies. And if you were to ask me, a little exposure to crypto is great, but I'd rather have exposure to real companies that can do this than to companies that are just you don't know.
Let's go to the RWA slide, Mike. I think it's like slide three. Yeah, the Venn diagram one. There you go. Yeah. You're gonna
Okay.
stay right there. Yeah, thanks, guys. Appreciate the feedback. Chris, Scott, John, everybody. Yeah, Rajesh. I think it's this is probably the area, like if there's one thing to leave you guys with, is understand everything that's behind this slide. Um, it's impressive. And so setting yourself, your family, your portfolio up for the future, whatever your risk reward appetite is and time frame, there's no question this is trillions of dollars. There is no question whatsoever in my mind that it will happen. The only thing we're going to debate is how we get there in the time frame.
Doug, I'd like to thank you so much for taking the time. I know it was a lot of time and effort for you to do this, and I appreciate it. And Christmas is coming. You never know what you might find under your stocking. Um,
You got it.
and guys, thanks for hanging with us tonight, and I hope you enjoy this. And yeah, Chris, if you go to this slide here, and again, I helped Doug kind of take that slit list down. Uh, on this slide here, again, you can pause it when you go through the video, or I'll take a screenshot and send it to you. We kind of took it. Some of these were the same, right? It was trying to keep it, intact. Like Doug really liked HSBC for what it's worth. And I said, for me, that thing gaps all over the place. It's not heavily traded here. So why don't we just stick with SoFi and some, and other names? But you get the idea. The ones that are grayed out, he decided was just extra exposure. So he pulled those off himself, right? So, you get the idea. Yeah, PayPal was on there. I don't think PayPal, for what it's worth, PayPal and XYZ really aren't leading this. They started out, and in my opinion, and Doug didn't bring them up, I don't think they're doing the right thing here. They seem to be falling behind. Yeah, Doug, should we
Sorry. Yep.
assume the big boys will consume the little ones to control this area?
Yes, that will definitely happen. I looked at David. I also looked at PayPal. I actually almost bought some today, and I was going back and forth between. I owned it last week on some of the bounce. Uh, then I got out of it, and then on Block, I actually almost bought some today, but I couldn't convince myself that I wanted to free up capital. So what I think is my suggestion. There's other names, and I'll share some stuff maybe tomorrow what else I have. But I would encourage everybody to look global. Everything that people are throwing out is US. But you start to look, zoom out. When in doubt, Chris is saying, when in doubt, zoom out. So you look at Deutsche Bank, you look at HSBC. I've spent plenty of time in Hong Kong when I was traveling for Apple. You know, HSBC is the JP Morgan, you know, Bank of New York Mellon of Asia. You start to look at Standard Chartered, look at some of these banks, they're way off the radar, but the big boys, they are, right, the elephants in other parts of the world. And again, I just want to own picks and shovels and toll booths for transactions for the next decade. I don't care.
John, New is a Sophie of Latin America, South America, so upcoming. It's the same concept, but just not in the United States.
Yeah, and then there's another one that I have on that note. Is it I don't even think it's on the list. I bought some more today. It's a Euro. I mean, not a European. It's an Israeli company, which is the hood, acts as the hood and the SoFi of Israel and the Mediterranean
Was it
region.
Seoul? No.
No, it might just be too small.
All right.
On, yeah, I'll drop it in later.
Thanks.
But go global. I think that's what I'm trying to say.
New would definitely fall under global, John. New is definitely global. But they're a smaller company. They're more risk, right? They're not as developed as most of these other companies. So just keep that in mind.
Yeah, I think my suggestion would be think about this like a pyramid, right? So go, start at the top with the Black Rocks of the world, and then go through the institutional tree. A lot of this, as you can imagine, financial institution, it is like the family tree. And then start with the Venn diagram. It's almost if you took the Venn diagram and then you started to add names around it and then expand it globally with a different footprint. eToro, that's the one I wanted to find. ETOR.
There you go. All right, guys. I'm going to let Doug run and everybody get going here. And I want to thank Doug so much. This was really great, very informative, and Anybody else wants to do something like this, appreciate it. Really great one done. And yeah, I will let this process and I'll post it in the webinar area here.
Yeah, it was my pleasure. I did a lot of this for myself as I started to dig into it. I actually really wanted to organize my thoughts and make sure, I knew, I wanted to convince myself, challenge, why I had the conviction that I did. And the more that I dig into it, it's pretty compelling. So I wanted to pay it forward. Mike, you've really helped me accelerate, some of my financial goals, being part of this forum, learning from everybody. So, I thought it'd be a good opportunity to pay it forward because it's a massive movement and everybody's here to make money. So hopefully that gives you guys a lot of opportunities, opens doors.
Thank you so much, Doug. All
All
right,
right, guys.
everybody. I'm going to let everybody go. I'm going to wish you guys a wonderful night. We'll have our year ahead on the 27th, probably around noon on a Saturday.